Welcome to the Hurley Investments Market View Commentary for the 16th. This is Tuesday night. We normally hold these on Monday, but we're doing it on Tuesday because of the President's Day weekend. Tonight, I want to talk about the long call and how you can use the long call as a stock replacement strategy that'll do a couple different things. It replaces the stock at somewhere between 10 to 30% of the value of the stock. It leverages returns, and it allows for new positions to be added to the portfolio while still maintaining a position in that stock. As I mentioned, we're going to use that long call. It's an option. People are sometimes worried about option, which I don't understand, but I can understand why they might be worried about some options, just not all of them. What is the definition or rights or responsibilities associated with a long call? You should be thinking to yourself, it's the right to buy a stock at a certain price for a certain period of time. Let me show you how I leverage profits in the sale of stock ownership. We will get you into some stock ownership. In this case, we bought Baidu at $144.90. And Baidu has rocketed higher. I originally had a call way out in time because this person's risk tolerance is so-so. They're a little worried about being in a Chinese-based stock. They are on our exchanges, but let's face it, it's China. They have a stock in China that some people don't necessarily feel comfortable with. So originally we had like a $20 credit out 7 months so I could get through a couple earnings. Baidu's taken off, so I rolled that $20 credit out to $200. Baidu is now going to have, well, it now sits at $326.20. So, plain and simple, this is a short call where I have to sell my stock at $20. Let's do the math, though. We purchased the stock at $144.90. We sold the right to sell it at $200 for $65. Let's work through some numbers on exactly how much am I going to make on this stock position. So I'm going to do the whole process for you right now. So I bought Baidu for $144.90. I sold a short call obligation to sell your stock for a certain period of time at a certain price. And I believe it was actually at $200. And I got a credit, $12. So if Baidu in January 2022 was higher than $200, I would have to sell my stock. Net gain, simple math, have to sell it at 200. I got to subtract out of it what I purchased it for, and I get to keep my credit of $12. Net, if I do the math, right? 200 minus the $144.90 I sold it for. That's a net profit of $55.10 plus the $12 of credit I get where I'm obligated to sell it. I could have made $67.10. Now, if I book this profit, I am no longer in the position. I sold my stock. I'm going to get taxed. In fact, it happened in 7 months. I'm going to get taxed. I'm going to get taxed quite a bit of money on it. Well, Kevin, how could you let this happen? How could you lose Baidu and get out of it, right? Well, the funny answer is that, believe it or not, I'm not always perfect. You guys might think I am, but I'm really not always perfect. So if you look at Baidu over the last 5 years, that's what it's done. 2018 was chugging along, 288 intraday, or 284 intraday was 288. Then we had tariffs and problem with China, and it fell down. Looked ugly. Why would I ever cap it? Well, it really comes down to this chart right here. Look at how long this thing just traded sideways. 120, 135, 128, 129, 138, 100, 102, different level, 114, 115, 116. It was pretty low. In fact, for a while, you could have, I did not do this, but you could have sold a call up here at 135 month after month after month. So as I decided, hey, at 135, right here, we're buying shares. Well, Kevin, it says you added some. Yeah, I bought some right here too, and it increased my cost basis. More money was put into the account. $144 to sell it up at 200 and get a $12 credit, like 8% of the value of the stock. No brainer. On this day, selling at 200 seemed amazing. Great position to sell at. 120, sell at 200, $80, not a big deal. And then the sucker took off. I was going to get called away and lose the stock at 200. Does anyone want to sell the stock at 200 if it's trading at $326? Personally, I'd rather sell it at $326. You want to sell it at a much higher price. So, true. I'm in a position to make $67. So the question is, Kevin, what did you do? I rolled the January 22 $200 short calls out to January 23 $200 short calls for a credit of $65.28, losing $10 to buy back the original January $200 position. So let me walk you through that. What I sold for $12, I had to buy back for $22. I lost $10, but I gained an extra $65. And I was thinking, there's no way Baidu is going to get higher than $250. There's a huge long-term resistance at $250. There's no way Baidu is going to get back there at $250. It was impossible, right? That was the expectation. Going way back in time, It was impossible to think when it was just down at 90, got up to 150. There was no way that Baidu was going to break the range right in there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 points over July to July, over a year, where there's no way Baidu is going to really break over 250. Well, Kevin, it did a couple times. 280, 265, 274. I mean, it came right back down, right? We're talking like a quadruple top. 6 times it came down. Wasn't supposed to get this high. Did I want to be out of Baidu? Of course not. I did not want to be out of Baidu. So what I did is I figured we'd book a profit. Baidu's probably not going to get back down to this, to below 200. So I replaced that position by taking $46 of the profit and buying some long calls. He's going to make $65 plus another $65. I mean, he's going to make $120 on these 300 shares. We're just waiting for time to happen right now. I took a third of that profit on 300 shares, and I spent $46.82 on 3 contracts. You multiply that by 100. So that way I could get above where we're going to get called out, plus the credit. 200 plus credit, $65. Subtract 10 is about $255. I still kept a position in play that would act like stock ownership. I took like 100 of those shares and took the profits to put into this stock replacement strategy. $46.82 times 300. It cost me $14,000. I'm taking some of those profits, which are going to be about 55, right? I took those profits, spent 14, currently worth $33,637.50. That stock ownership is going to disappear sometime in the near future. I'll be in it for a year. I'll have long-term capital gains. I'm going to book, when it's all said and done, current position profits are equal to, still getting called out at 200, and I got to lose what I paid for it, and I got to lose my 10 bucks. I get to add into it now $65.28. I'm just sitting on this position. 200 minus 144.90 minus my $10 on the loss of the roll plus $65.28. He's going to book $110.38 per share, which is 300, which will equal $33,114. But because I didn't want to be out of the position, we still have another 19 as we've seen Baidu go from and above 205 to 326. Excuse me, it was 250 to 326. How much did your original shares cost? $144.90 times 300. I got into Baidu at $43,000. I'm going to get called out of Baidu at like $76,000. We're going to make $33,000 on the $43,000 I put in. It's a 75% return. I've got returns here that are almost a 200% return. But here is his Baidu replacement strategy. Calls will get called away relatively quickly here. We'll free up $76,000 in his portfolio. And we're sitting pretty darn good, all in all. Now, some people are going to notice a change in their positions. If you were the $12 one, we took these profits of $180, which is what? $158 a share. And for every 3 contracts you had, we created a new position that's a January. Why am I telling you this? I can show you. It's a January 23, $350 call position. For a lot of you, we created this trade right here. We spent $100 out of the 150 that you made, 158 per contract. For every 3 you had, so you made 158. For every $450 you made on your first trade on Baidu, we took 100 of that and put it into this trade, where we just bought these long calls for $350. And they're in here somewhere. I just haven't come around to find them. There are like 8 of them somewhere. But then something we realized today was, hey, if you add a short call out there in time, we are obligated to sell at $450, $100 higher, you can take in a $75 credit. For the cost of $22, you could make $100. And we're like, oh, that's great. But hey, Kevin, we've got a lot of other positions that are profitable. If I can go back and show you, we've got the January 22 calls, and we got 49, January 23, 250 calls. Again, what we spent $65 on, we have 100% return. What we spent $47 on, we have $161 profit. It's like a 300% return. What we spent $37 on, sell it for $193, $160 of profit. There's a 400% return, 300% return. We just noticed we had all this profit sitting here on these positions. With that said, we need to book that profit, or we need to protect it. Kevin, why would you protect it? Did you not see this chart? April last year was 82. June it was 90. August it was 115. October it's 130. It's now 326. Yes, it's been held down for a couple years. But holy Toledo. You can choose to let it ride and gamble, or you can protect your portfolio. As Keeve and I were looking at things today, we came up with this fancy idea for current positions that we already had in play. Got all these custom ones, so let's go through a couple of these. For some that had 250 calls that we spent $65 for, we added 450 short calls, $75. So listen to what I'm going to tell you right here and see if you like it. You just got paid $9.50 to try to make 200. Listen to that one more time. You just got paid $9.50 to make 200. Some had 350s. Those were where I rolled up. The problem with rolling up in strike price mod is it creates a taxable event. We still need to do a little bit. Here's another one. January 23rd, 250s, $63. We just took in a credit of 75. You just got paid $12 or $11.80 to try to make 200. One more time. You just got paid $11.80 to try to make 200. You're in a risk-free trade. So a couple questions came in. Mod, but even if you roll in time, don't you create a taxable event? So some of these 15 contracts we rolled up, 15 contracts of the January 22 150s we rolled up and we booked a profit. A lot of these other ones we already had in place. We've had it in place for 6 or 7 months. January 23s and January 22s. In fact, what I should really do, give me a quick second here. We had certain ones that were at 250s. We have January 22s that are at 240s. I love these ones. 240s, right? $38 we paid for it. We can book a profit, sell it at 121. We can make, you know what, $83 a share, $93 a share. Or we can create a risk-free trade. You just got paid $8 to wait a while, but to make 210. Listen to that one more time. You're in a risk-free trade. If Baidu went out of business, you would still make $8. Hopefully we would sell it before then. But you just got paid $8 in this position. Wait for a little bit of time, January 2022, to try to make $210. Let me put that into perspective for you. 5 contracts, 500, right? 500 times $8. You just got paid $4,000 to try to make 210 times 500 to try to make $105,000. The people that are right here, if that was one single position, you just got paid $4,000 to try to make $105,000. The people that are in the 250s, January 23, right? And these are kind of split, because I got half that have the protection, half that don't. But taking a look at these ones, 2 contracts, right? 75. You just got paid $7,580. I'm sorry, you paid 65. You just got paid $1,000 to try to make 20 grand. $350s, $340s. On these ones, you actually, this one's kind of interesting. For these ones that are here, you just captured $193. For every one contract you had, you just made $19,300 as we close the position. Times 12, let's do the math. 181. You just made $181. You just made, for every one contract, you just booked $18,100 of profit. To now spend 93 minus 75, 93, 22 times 100. You just made, for every one contract, you just made $18,100, and you're now spending 220. Excuse me, you're now spending 2,200 to try to make 10,000. For those of you that were in the 40s, right? Unbelievable. The 240s, January 22. You spent 3867. 3867, you just got a credit of 46. Times 5 contracts here, right? Oh, you just got paid $8. $7.70, 77, 770 times 500. You just got paid $3,850 to try to make 105,000. And there's a lot of them here. How amazing is it to be in a risk-free trade? All you that had January 23 250s, $64, just got paid $75. You just got paid $11 or $1,100 per contract to try to make 20 grand. One more time. If Baidu goes out of business, you'll still make $1,100. But you just got paid $1,100 to make 20 grand per contract. We have 35 contracts here. Multiply that times 100, right? 35 times 100, 3,500 times $200. This group of people just got paid $38,500. These 35 contracts, whoever's here, this group of people just got paid $38,500 to try to make an additional $700,000. What an unbelievable opportunity we've had with Baidu. I did not mean for it to turn out to be this long. Let me rip through the rest of this and then leave it available for questions for you. Where will our markets head this week? I'm going to go up because I've been wrong the last two. We are bullish on the Dow Jones Industrial Average. We are bullish on the S&P, not quite overbought. We are bullish on the NASDAQ, just off of the overbought. If you ask me where we're going to end our February, it's time for me to change my tune. I think we will most likely be up 2%. This is going to be on stimulus hopes. If we get more stimulus, we're going to see more people, more money flood into the market. Earnings, not much is really going on. Elegant, Granger, Devon Energy today, Garment, Hilton, CF Industries, Herbalife, IQ, VMware's Baidu on Wednesday, Barrick Gold on Thursday, PPL, Walmart, VMware, Roku, Newmont Mines, Friday, Disney, I forgot what VBR was. Economic reports, basically housing. Big day tomorrow, though, with retail sales, business inventories, capacity utilization, industrial production. Building permits, housing starts on Thursday. Existing home sales on Friday. And the monthly, February options monthly expiration occurs this Friday. What else do we have? International. Never even met to international. Everything's U.S. How am I looking to trade? I just showed you. Very interesting. Attention to power users. Most day traders lose money. Great explanation of how day trading is so dangerous. Please enjoy it because I sure did. That led me to another article. Scientists discover why most traders lose money. 24 surprising statistics. Make sure you go through this one because it's a hoot. Now, of course, these statistics are somewhat obvious. 8% of day traders quit within 2 years. Remember, I used to bet $1,000 that people could show me 2 years in a row, and I'd win it every single time. No one would ever bet me. They're just statistics to see why day trading never, ever really works. Again, I enjoyed it. I laughed at it. You've got to enjoy just enjoy the article. Enjoy the article because it's absolutely hilarious. My most important one is that day traders tend to think that they're getting repeatable chart patterns, but because there's not enough time, it's not a repeatable event. Anytime I hear a chart pattern, someone tell me technicals on chart patterns, I just laugh my butt off because it doesn't work. It's not available, not important, not going to happen. Powerful corporate profits and forecasts of more to come, investors cheering. That's why we might not get our pullback until April or 5 days after we get our stimulus. It might come to us sometime middle to end of March. But just an interesting article on how, of course, we should beat the bar because the bar was set so low after last year's pandemic. JP Morgan's barometer says markets most complacent in 2 decades. This is why you have to stay on top of your portfolio. You can't be complacent and just put money in. A great article on how far a market can fall so quickly. Had to stick this in here for you Bitcoin people. Top strategist sees a troubling trend amid record mark inflows on Bitcoin. Just take a look at where GameStop is at today. Back down to $45 or $42. Was up as high as 500 and something. Expect a 92.5% drop in Bitcoin as well. And then the best one, 5 Caribbean islands where it's affordable to live. Man, look at that picture. Now you can see where my head's at. I just found interesting. Belize has always been talked about as a place to retire. I would not go to Honduras because of the cartels. I would not go to Mexico because of the cartels. I would not go to the Dominican Republic because of the poverty. Panama kind of strikes an interest. You could maybe get me there. Guys, what questions do you have? Some of you have, Some of you are going to ask me, well, Kevin, why do I only have half with that short call and half uncapped? If you're in that group where you have, it looks like twice as many positive calls to negative calls, that's because you just booked $181 a contract and I'm letting some of that money ride. Who wants a currency dependent upon traders? Yes, there's nothing fundamentally behind Bitcoin. Kind of a joke. Are these prices for Baidu like this because of the recent run up? All stocks don't have option prices like this, right? Correct. I mean, we literally on Baidu have seen a tripling in price. I'm going to go back to my chart. We have had a tripling in price of Baidu from the lows at $82, sitting up at 326, right? At 328, you have a quadrupling of the price. Right here at $82, you are 4 times higher when it hits 328. Option prices have exploded. For some of you, we were getting into positions here and here. I missed 82, but we had some here, some here. And because I did my homework, Baidu was supposed to go significantly higher. The price, a fair value price on Baidu, back up to the 288 highs. In fact, it even went down lower. I think it was 256 to 277. With current P ratios, it's still only at like 288 to 292. We're overvalued on Baidu by 10% right now. Could it be because it went through 2.5 years of tariffs and China being held back? Well, probably not, because it's Google, for crying out loud. Our tariffs had very little, if any, impact. They were having great earnings quarter after quarter after quarter, and it was tanking. What's probably the answer? Well, the fact that Trump threatened that they were going to pull it off the exchange, that we were not going to have Baidu on the exchange. So people sold off of it. They got out of it. They were gone. Think of all of those people that bought out, got out of Baidu. Kevin, shouldn't we get out? Well, maybe. I don't know yet. Well, if it gets kicked off the exchange, could we lose all of our money? No, it's just the shares transferred to another exchange. Oh, but it's so scary. Baidu could really get hit hard with these tariffs and Trump hates China and blah, 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 blah. True. Nothing a protective put can't solve. For all you people that stayed with Baidu through the time period, let me just go back to this. Some people just got paid $38,500 to try to increase that to $700,000 more a profit. Some of you are getting paid $14,000 total for that group of contracts to make $105,000. Some of you are getting paid $22,000 to make $650,000 of profit. What an amazing position we're in, because we've chosen to sit back and go through a little bit of pain. Add positions, add shares, dollar cost average. The neat thing is, back up at 280 to 250, I took a bunch of leap call contracts on there. And I didn't even start adding some more back in till down at the lows at 100. That's not true. I actually added some of the 150s. back there in 2019, January. Cannot tell a lie. You'll prove it to me in my history, right? All right, please refresh me on the statements of the Williams percent R. The Williams percent R is a medium statistics. The easiest way to say it is where big money is putting their money. There is no more big money expected to be putting their money into Baidu right now because it's way overbought. So do not expect big money to be entering Baidu anymore. It already went through that and stayed overbought for a month in December. And wow, let's just say wow. All those fears that people that were unsubstantiated, all that fear mongering that it did to people gave us an opportunity to take advantage of the market that we're in. Guys, take care. Appreciate your time here and have a good evening. Bye-bye.